Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehi Shah and I'm live to you from the Motilal Oswal studio. This is a show where we'll be taking you through all the big buzzers in today's trade, give you a fundamental as well as a technical check on some of these stocks, tell you why these stocks are in focus in today's trading session. And we'll be doing all of that in under a minute, and very soon we'll be joined by a tech expert on the show as well. Before we do that, it merits to take a look at the market because we are at the day's lowest point when it comes to the Nifty. We are now testing the 22,750 mark. We have slipped below the 22,800 mark. We did that earlier in the day as well, but now it's almost at the day's lowest point and not looking good at all for the Nifty. Sensex too in tandem with the Nifty, a 0.6% cut coming in across both of those benchmark indices. Broader markets are leading the falls in today's trading session. You have Nifty mid-cap that's low by 1.3%. Small cap also right there at 0.8% cut coming in across that index as well. So the real losers are coming across the broader end of the market, particularly from the mid-cap space. India VIX seems to have recovered quite nicely because at one point we were above that 15.2 mark. We had seen a 3% spike coming in on India VIX, but that seems to have cooled off right now. And see, we're almost at the lowest point of the India VIX as well. So at least for now, that is holding up well. Nifty Bank continues to trade with cuts, a 1% cut coming in on Nifty Bank as well. Across all of this market mayhem or Freaky Friday, if you could call it that, you only have the metal index that's doing well in today's trade, 1.1% higher coming in on the metal space. On the flip side, autos are the biggest loser on the back of that potential reciprocal tariff announcement coming in from overseas. You have Nifty Auto that's down by 2.5%. Nifty Pharma following close with a 2% cut coming in. PSU Banks, Realty, IT Bank, FMCG, Energy, all of these are your big losers today. Metals only the only pack shining in the green. But on that note, let's welcome on board Arpit Beriwal, Manager Derivatives Analyst, Equity Research at Motilal Oswal Financial Services. He's going to be here on the technical front, and from our in-house research team, we have Rabinder joining us today. Good afternoon to both you gentlemen, and thanks so much for joining us on the show. Arpit, coming to you first. Bajaj Finance is the stock that you've picked out. Last 6 months, last 1 month, the stock has done decently, not all that bad. Recently, we've seen a slightly negative note coming in on this one from brokerages. What are you making of Bajaj Finance on the charts?
Very good afternoon, everyone. So, if we see overall, in last couple of weeks, we have seen a very downtrend or in the overall broader market. However, selective NBFC stocks has outperformed. And if we see within the NBFC space, Bajaj Finance has been a huge outperformer. So, technically, if we see the chart setup wise on the monthly scale, it gave a range breakout almost after 41 months. That was a huge consolidation between 6,700 to 8,000 levels. And the previous month, we have seen a range breakout above 8,100 levels. And the good part is that it is holding at higher levels in spite of weakness in the broader market. On the weekly setup, if we see, it is forming consolidating between 8,050 to 8,500 levels. And on the daily scale also, it is perfectly respecting about its 20 DEMA. So looking at the overall chart setup wise, the stock is in quite strong uptrend. And as we see some recovery in the market, overall the NBFC space is likely to outperform. So within this space, Bajaj Finance would be a top pick. One can go long in between 8,300 to 8,320 levels, with keeping stop loss of 8,050 for an upside move towards 8,750 zones.
That's the take on Bajaj Finance, and 24% return in the last 6 months is what that stock has given. Let's move on, talk about a big buzzer in today's trading session. I'm talking about ITI because that stock is locked in 5% upper circuit today, and this increase in ITI share price was followed by the company's announcement that it has received a revised order from the AMRCD. Now, according to this order, ITI is required to transfer its 22.25 acres of land at Electronic City, which is in Bangalore, to CDOT, which is Department of Telecommunication, through a sale deed for a total consideration of 200 crores. As part of the revised AMRCD order, ITI has received the first payment of 100 crores from CDOT on February 19 in accordance with the executed sale agreement. The remaining balance is expected to be received upon the completion of additional statutory formalities, but the first tranche of this 200 crore, which is a 100 crore leg up, is in already for ITI. Very positive news flow coming in for this company. The stock is locked in upper circuit ever since the get-go of today's trading session. But on that note, let's once again come to you, Arpit. You picked out JSW Steel on the charts today. We have some very bullish brokerage notes also coming in. That stock is doing pretty well today. What's the outlook going ahead?
If you see overall the metal index has last couple of days it has not fallen much, and relatively metal stocks are outperforming. So if you see the setup of within the metal index, JSW Steel is one of the strongest counter within the entire metal pack. Technically also on the monthly scale, it is negative formation of lower rise after 4 to 5 months. On the weekly scale, It has formed a strong base near 930, 935 levels, and on the daily scale, slowly gradually the stock is moving higher. So if we see the setup wise, as we have seen good recovery in the metal index and metal stocks, so JSW is trading near its life high territory, and a closing above 985 can definitely start the next leg of rally towards 1020, 1050 levels. So within the metal pack, JSW is a strong outperformer, and the beauty over here is that in spite there has been weakness across the market, but this stock is still barely a couple of percentage lower from its life high. That really shows the relative strength of the stock. So one can go long in between 970 to 975 with keeping stop loss of 935 for an upside move towards 1050 zones.
Okay, those are the targets to watch out for on JSW Steel. Rabinder, coming to you, we'll keep it going with the JSW group of stocks. You've picked out JSW Energy for us. It's high flying in today's trading session on the back of a brokerage note. Tell us what it is.
Well, yes, JSW Energy is in focus. There, Morgan Stanley has initiated their report on with overweight rating with target price of rupees 545. They say that the company has gained market share in recent bid at a competitive price and is one of the fastest growing utility companies. Morgan Stanley says that the company has among the smartest and most experienced management teams in India utility space with a strong execution track record on growth and at a reasonable balance sheet. They estimate that the JSW Energy need about 175 billion rupees over FY25 to 28 to commission is under construction pipeline, which Morgan Stanley say it can be funded by internal accruals, and Morgan Stanley expect EBITDA CAGR of 24% over FY24 to 28, and the renewable energy EBITDA can grow at 52%, and back of this brokerage note, stock is up over 6%.
Okay, looking good and flying high amid a market that's largely sideways is JSW Energy. But let's move on and hear it from a prominent market voice, a big advocate of India's self-reliance in energy and renewables. You have the word coming in from Enam Holdings' Manish Chokani, because he believes the need of the hour for India is increased investments in energy security. Even as he marks the space as a long-term opportunity, he believes it is best to monitor valuations in this current market. Let's go across and listen.
In terms of renewable, I do think that's a very, very long-term powerful theme which is still running. Valuations in some cases are not sustainable, but the theme itself is very, very powerful. That we will have to invest a lot more into our own energy security, and whether it's wind or it's solar or it's nuclear, anyone who's playing into that, including the transmission players, there's very, very long room, for years ahead for money to be made over there. I would just watch out for valuation, because again, like people take the 10-year story and then they pay up for the 10th year, immediately. That's really what one has to be cautious against, because as an investor, the only thing in your hand is the price you pay at entry. After that, everything is in the hand of Mr. Trump and the market cycle and the politicians. So it's best to be a bit cautious when you're buying, and then be optimistic in whatever you're owning, and see how high the market can take it. The J curve of energy consumption, because as you get richer, you don't just go and buy a car and you don't just go and buy a mobile phone, you end up consuming a lot of energy as well. And we haven't invested in energy really after the blow up of 2007-8, when all these power companies went downhill. So that power shortage in India and the demand for power in India is a long-term trend.
Okay, that's the word coming in from a big voice on the street, Manish Chokani. But on that note, we'll slip into a very short break on this edition of Market Fatafat and keep it going with all the big buzzers in trade just on the other side of this very short break. Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus today. And Arpit, coming to you, you've picked out SRF on the charts for us. Last 1 year, last 6 months, 1 month, it's not done all that much, but then again, it's given positive returns. It's not gone into negative territory. That being said, it's been a consistent slow performer, but it's been steady as well. So what's the view on the charts going ahead? Can we expect the stock to pick up some steam, some momentum now?
Yeah, if you see overall the chemical space, a lot of stocks has been seeing the carnage in last couple of weeks. But if you talk about SRF, overall the setup wise, the last 3 years, it was consolidating in a broader range in between 2100 to 2600 levels. In the January series, we have seen a massive breakout on the monthly chart above 2650, 2700 levels. And the good part was that the rally was seen towards 3000 levels. However, in the last few days, the stock has cooled up from higher levels from 3000 to again back to around 2650, 2700 levels. So it has retouched its previous week on the weekly scale. And on the the daily scale also, it is negative formation of lower highs and comfortably trading above short-term moving average. So looking at the position setup wise, definitely multiple supports are intact at lower levels near 2650, 2700 levels. So SRF from here on with 1 to 2 years perspective, 1 to 2 months perspective, the stock looks very strong. Slowly, steadily, we can see another high towards 3000, 3050 plus levels. So this would be a top pick. One can go long on minor dip near 2700 levels with keeping stop loss of 2600 for an upside move towards 3000 plus.
Plus, next target to watch out for an SRF on the upside. Let's talk about a stock that's been doing very well for itself in today's trade, and that's L&T Tech, because the company's share price jumped nearly 5% to a one-week high today after it received a double rating upgrade from Macquarie that said its steep discount to similar size peers now offer value as well. Now, the stock is still trading with gains of 4%, so looking good for this one. The brokerage had downgraded the stock in April last year, remember, expecting growth to lag rivals. However, L&T Tech now trades at just an 11% discount to Coforge and 30% discount to Persistent Systems based on FY26 price to earnings. This has prompted Macquarie to upgrade the stock to outperform and revise the target price to 6,530 rupees per share, implying a 33% upside potential from where the stock is right now. The brokerage sees faster growth for the company following the $110 million acquisition of US-based Intellisys Software Inc. and it also expects growth to pick up in the more lucrative plant and engineering segment as well. So that's the note coming in from Macquarie. Very bullish on L&T Tech. The street is echoing that sentiment as well, and 4% higher is where that stock is as we speak. But Arpit, coming to you, Shriram Finance is the stock that you've picked out for us. When I pull up the chart of this stock, last 6 months, last 1 month, it's been slightly under pressure. Last 1 month, rather, it's done pretty well. What's the outlook going ahead?
Overall, the NBFC space in the last 1 month, relatively banking stocks relatively outperformed. So if we see on the monthly basis, Bank Nifty is on a flattish note, and if we talk about financial stocks also, NBFCs, Shriram Finance, if we see on the weekly setup, a good recovery is seen from lower levels from near 530, 535 levels. It has formed a strong bullish candle on the weekly scale, and on the daily scale, it has given a falling supply trend and breakout almost after 3 months. So if we see the setup wise also, it has managed to surpass 50 DEMA and holding well above the same. Some minor cool off is seen from the higher levels, but if we see the base of the stock is shifted higher from 520 to now 540, 545 levels. So slowly, steadily we can see an up move towards 610, 620 levels. So Shriram Finance would be another pick within the NBFC space. One can go long in range between 570 to 575 with keeping stop loss of 545 for an upside move towards 6150, 615 and then 630 zones.
Okay, so those are the next levels to watch out for on Shriram Finance. Ravinder, coming back to you, another stock from the JSW group. This one also flying high today. JSW Infra. Tell us why that is.
On back of brokerage note, JSW Infra is in focus, where Motilal has maintained the buy rating on JSW Infra with target price of rupees 330. They say that the company is looking for both organic and inorganic expansion opportunity and has port location spread across different regions. And JSW Infra has signed an agreement for operation and maintenance of bulk cargo handling at port in UAE. And with the capacity expansion and a growing share of third-party business, JSW Infra growth momentum is expected to continue, and company is projected to achieve a 14% annual volume growth CAGR and 22% revenue growth CAGR from FY24 to 27. And back of this brokerage note, stock is up over 7% to trade at 1 week high level.
So that's the reason why JSW Infra is doing pretty well and trade up 7%. But on that note, thank you Arpit and Ravinder for joining us. Unfortunately, that's all the stocks we could talk about in this edition of Market Fatafat. On that note, we'll wrap it up, and it's a goodbye from me and the team that put this show together. Thanks so much for watching. Stay tuned to ET now for more news and updates.